Welcome to Earnings Digest, your go-to for quick insights into the economy and stock market, all in under 15 minutes. Today, we're diving deep into India's stock market outlook for 2025, using hard data to paint a clear picture for your investment decisions. So let's start with the current landscape. India boasts a $5 trillion market cap. That's impressive. But we also see a slightly elevated price-to-earnings ratio, hitting 28.0x, which is a bit higher than its three-year average of 24.4x. This raises a question: is the market overvalued, or are there other factors at play?
Well, it's tempting to jump to conclusions based on the PE ratio alone, but let's dig a little deeper. One thing that stands out is the robust earnings growth. Indian companies have been clocking in an annual rate of 18% over the past 3 years.
So that strong earnings growth could justify the higher PE ratio then?
Exactly. It suggests that investors are willing to pay a premium for companies that are delivering solid profits. But let's not forget about recent market movements. The Nifty 50, a key benchmark index, has actually dipped over 7% from its record highs in September.
Right. There's been a lot of talk about foreign institutional investors, or FIIs, pulling out funds. A massive 45,974 crore rupees in October alone. And haven't corporate earnings been a bit shaky lately? Could those be contributing factors to the dip?
So FIIs are essentially large institutional investors from outside India. Think of pension funds, hedge funds, etc. Their investment decisions can definitely influence the market. And yes, their recent pullback, likely driven by a strengthening U.S. dollar and rising bond yields, has played a role in the Nifty's decline. As for corporate earnings, there have been some soft spots, but short-term fluctuations are to be expected in any market. Remember, we're interested in the long game here.
Okay, so we've got this interesting dynamic. Impressive market cap and strong earnings growth on one hand, but a slightly high PE ratio and recent market dip on the other. What does this all mean for someone looking at the Indian market in 2025?
It's all about context and understanding the bigger picture. Let's zoom out to the overall economic landscape. India's GDP growth did slow to 5.4% in the last quarter, but this was largely due to temporary weakness in the manufacturing and mining sectors.
That makes sense. So it's not necessarily a sign of a systemic problem.
Right. And projections show a rebound to 6.6% growth in 2025, positioning India as the fastest-growing major economy globally. This is a key factor to keep in mind when evaluating the stock market's potential.
So even though we've seen some recent market jitters, the underlying economic story of India seems quite solid. But what about things like inflation and unemployment? Those are crucial factors for any economy.
Absolutely. The good news is that inflation is projected to stay within the RBI's target range of 5.1% for 2025, which indicates stability. And the unemployment rate is expected to drop to 7.5% by the end of 2025, suggesting a healthy job market. This all feeds back into economic growth and ultimately the performance of the stock market.
Okay, so we've got a picture of a robust economy with positive projections, which bodes well for the stock market overall. But let's get specific. Which sectors look particularly attractive for 2025?
There are several sectors that stand out. First, technology. A global powerhouse with companies like TCS, Infosys, and Wipro perfectly positioned to benefit from the rising global demand for IT services. We're talking about cloud computing, cybersecurity. These are huge growth areas.
Right, and India has a real edge in the tech space. What else is catching your eye?
Banking and financial services are also poised for strong performance. We're seeing improving asset quality, higher credit growth, and a push towards digitalization in the sector. This is all positive for the long term.
So tech and banking are looking strong. But what about something a little different? Any sectors that might be flying under the radar?
Renewable energy is one to watch. India has set ambitious clean energy goals, and that's creating a wealth of opportunities. Companies involved in solar and wind energy are likely to see significant gains.
That's interesting. And for investors looking for more stability, what about FMCG? Fast-moving consumer goods like packaged foods and personal care products.
Yes, FMCG is driven by rising incomes and urbanization. So companies like Hindustan Unilever and ITC offer a solid option. They tend to perform well even when other parts of the market are struggling.
Okay, so we've got a sense of the broad economic picture, some key market indicators, and a few sectors that are particularly exciting for 2025. But what about the actual projections for the Sensex Nifty 50? These are the indices many investors watch closely.
Analysts are forecasting a 9% rise for the Sensex and a 14% rise for the Nifty 50 by the end of 2025. These are driven by the strong fundamentals we've discussed, earnings growth, a positive economic outlook, and opportunities in key sectors.
Those are some pretty compelling numbers. But before we get ahead of ourselves, let's also address the historical trend of the Nifty 50 performing well after U.S. presidential elections. Average gains of 21.7%, median gains of 25.7%.
It's a pattern that's hard to ignore. But past performance doesn't guarantee future results, and it's crucial to understand the why behind this trend.
Exactly. Is it driven by policy changes, investor sentiment, or something else entirely? Unpacking that could be really insightful.
It's a complex interplay of factors, and there's no single answer. But one theory is that U.S. elections often bring about policy shifts that have ripple effects on global markets, including India.
So the U.S. elections could be a potential catalyst for gains in the Indian market in 2025.
Let's shift gears a bit and talk about some other sectors that you should have on your radar for 2025. Healthcare is one that often gets overlooked.
Healthcare. Tell me more. Why do you think it's so promising?
Well, consider this. India has a rapidly growing population with increasing healthcare needs. And with rising incomes, people are more willing and able to spend on their health, driving demand for healthcare services, pharmaceuticals, and medical devices.
So it's a play on demographics and economic growth, right?
Exactly. Plus, India is becoming a hub for medical tourism, attracting people from all over the world for affordable and high-quality care. This further fuels the sector's growth.
That's a really interesting angle. I hadn't thought about medical tourism's impact. So healthcare is a sector to watch for sure. What other sectors are you intrigued by?
Infrastructure is another one with massive potential. India has a huge need for development, roads, railways, airports, ports, you name it. The government has launched ambitious programs to address this, attracting significant investments.
Okay, so companies involved in construction engineering and related fields could be big winners here. But isn't infrastructure a long-term play? What makes you think 2025 will be a significant year?
You're right, infrastructure projects take time. But many of these initiatives are gaining momentum now, with 2025 and beyond looking like key periods for execution and growth. Plus, don't forget about digital infrastructure data centers, fiber optic networks, 5G rollout. These are all crucial for India's digital transformation and present exciting investment opportunities.
Ah, so it's not just bricks and mortar, it's the digital backbone too. Makes sense. This is giving me a lot to think about as I look at my own portfolio. But with all these opportunities, it's easy to forget about the risks. Are there any potential challenges that investors should be aware of?
You're always right to be cautious. Geopolitical instability is a factor, as global events can impact any market. There's also regulatory uncertainty. Changes in government policies or regulations can create a less predictable environment for businesses.
Right, and even with a positive outlook, there's always the possibility of an economic slowdown, both in India and globally. Those are all important things to keep in mind.
Absolutely. It's vital for investors to stay informed, to do their due diligence, and diversify their portfolios to manage risk. No investment is completely risk-free, but understanding the potential downsides helps you make more informed decisions.
That's solid advice. It's all about balancing the potential rewards with a clear-eyed assessment of the risks.
Precisely. And remember, India has a young and vibrant population, which is a huge asset in the long run.
You're right. A young population means a large workforce and a growing consumer base, providing a long-term tailwind for economic growth.
Exactly. It all adds up to a very positive picture for India's future.
That's a great point. Investors are increasingly looking at ESG factors, environmental, social, and governance, when making decisions. So where does India stand?
India has made significant commitments to sustainability, particularly in renewable energy, aiming for 40% of its energy from non-fossil sources by 2030. This is driving huge investments in solar, wind, and other renewable sources.
So companies operating in this space are not only contributing to a greener future, but also positioning themselves for strong growth. It's a win-win.
Precisely. And it's not just about renewable energy. India is making strides in other areas of sustainability as well, such as water conservation and waste management.
It sounds like India is making a real effort to embrace sustainability, which is encouraging for investors who prioritize ESG factors. But let's get back to the stock market specifically. What final thoughts would you leave our listeners with as they consider the Indian market in 2025?
Well, India's stock market offers a compelling mix of growth opportunity and a commitment to a sustainable future. It's a market worth exploring for any investor looking to diversify their portfolio and tap into one of the world's most dynamic economies.
That's a great takeaway. But it's not just about throwing money at the market, right? It's about understanding the nuances and making strategic choices. And that's what we aim to do here at Earnings Digest, to help our listeners like you make sense of the complexities of the financial world.
Absolutely. We want to empower you with the knowledge and insights you need to navigate the market successfully.
So let's distill all this information into some key takeaways. If you're considering investing in India's stock market, what are the most important things to keep in mind?
First and foremost, understand that India is a long-term growth story. There will be ups and downs, as with any market, but the underlying fundamentals are strong.
So you're saying it's important to look beyond the short-term fluctuations and focus on the bigger picture.
Exactly. Second, don't put all your eggs in one basket. Diversification is key.
Meaning invest across different sectors and companies to spread the risk.
Precisely. And third, do your homework. Research the companies you're interested in, understand their business models, and assess their growth potential. Don't just blindly follow the hype.
Make informed decisions based on solid research. What else should investors keep in mind?
Be patient. Investing is a marathon, not a sprint. Don't expect to get rich quick. Have a long-term perspective and let your investments grow over time.
Wise words. We've covered a lot of ground in this deep dive. From the macroeconomic trends to specific sector opportunities and potential risks, I think you've given our listeners a lot to think about.
I hope so. It's all about empowering you to make informed investment decisions.
And remember, we're here to help you along the way. We'll continue to bring you insightful analysis and data-driven perspectives on India's stock market and beyond. Stay tuned to Earnings Digest for more deep dives into the world of finance and investing. Until next time, happy investing.